Tell me, what are you expecting when it comes to Target? We've been talking to other guests about this. Target and Walmart, while they're often kind of lumped in together, Walmart has a very big grocery business. About half of their revenues come from grocery. Target, much more consumer discretionary. Analysts came out with a note saying about half their goods are imported. So what are you expecting?
Look, it's really hard to predict what's going to happen on any given day. It's a fool's errand to say what their earnings are going to be right now or what their sales are going to be. But the bigger picture is Target is a very badly broken story. They're down from a high of over $240 a share just a few years ago. Now they're at $98. And you said, as you pointed out, they're down 27% year to date, down 37% over the last 52 weeks. During that same period that Target stock was down 37% the last 52 weeks, Walmart's up 52%. So Target's getting killed. That's what's going on in the marketplace. It has nothing to do with tariffs. That's a big problem to add to all their other woes. But basically, they're off strategy at Target. They're overpriced, and they're not executing, and they haven't been for a few years. They continue to disappoint. So whatever they report today, it's versus very low expectations, and so they could beat them. They might not beat them, but the story is still fundamentally broken. Walmart's same-store sales report was a gain of 4.5% year over year for the quarter. Target is supposed to have a negative same-store sales report today, down 1 or 2%. We'll find out exactly what it is. They could beat that, and the stock could go up for a few days. But basically, that's a massive gap in performance by companies that used to be equal competitors.
Yeah, we're showing it right here. I mean, a big delta when it comes to performance between these two companies. I want to ask you another question more going forward. So we heard from Target CEO Brian Cornell a few months ago. He said they're going to have to raise prices due to tariffs. Since then, the president's kind of taken a pretty strong stand against companies that mention tariffs in their pricing or talk about raising prices. So going forward for Target, it seems like they're kind of caught between the fire and the frying pan. If they say they're going to raise prices, what does that mean for their customers? Do you think that would scare some customers away? If they say they're not going to raise prices, what do you think that means for investors?
They don't have to say anything about what they're going to do about prices. I think we all saw this week what happens when you do that. Walmart's earnings report last week, when they mentioned that prices would be going up on some items, totally unforced error, totally unnecessary. 2/3 of Walmart's sales are in groceries and consumables. Those are mostly domestically sourced. There was no reason for them even to discuss prices. Home Depot went to school on what Walmart had said. So yesterday they said, generally our prices are going to be about the same. That's exactly what Walmart should have said. Too little of their assortment is actually even affected by the tariffs for them to have had to say anything. That was in the midst of a report, by and large. You said it was mixed. It was a great report from Walmart, but they messed it all up by walking into this whole pricing and tariff mess. They never should have even gone there. And Target, okay. Look, if their other results are poor, I expect them to talk only about tariffs because they don't want to talk about how broken the business is.